Good morning, Doug.
Hey, good morning.
It's a winter-like day here in Carmel, Indiana. I was getting ready to say Fishers, but I forgot I crossed over the river.
Well, you crossed over into Carmel, which is the land of roundabouts. And if you need a great present for your loved one of my friends, Brian, he took pictures of all the roundabouts in Carmel and made them into a poster. And so if you're looking for that special, unique Carmel gift for somebody, there it is.
That would be a significant poster with small pictures, I would think.
It is. Yeah, it's kind of like that asset classes chart that I showed last week. And I've also brought it again today.
Man. So what is your record in one time around a roundabout? How many times have you gone around a roundabout?
I don't know. When they were first made, the joke was, well, my joke was with our family was, hey, this is taxpayer money, let's enjoy it. And so I would take the family around like twice, maybe, I don't remember doing more than twice, but that was just for fun.
There's a small one close to where we go to church on Sundays, and my record is 5, but at about 5 I start getting a little dizzy because it's such a small one and I go too fast. So anyway, I added a serious disclaimer this week. If you're heading to certain destinations, traveling internationally, I think it makes sense to pay attention and reevaluate whether those destinations make sense or not.
What do you mean by that?
I'm just saying our friends of the south of the border need to protect the American citizens.
Yeah, okay.
Yeah, that's what
I'm tracking with you now.
Yeah.
Drug cartels apologizing. That's interesting.
Yeah.
Okay, I'm tracking. I'm tracking. I'm slow.
I'm just saying, we admit every week that life is risky, but we say it kind of superficially that it's risky, but it literally, you have to make decisions when you're considering risk that's out there. And there you go. That's all I was saying.
Yeah.
I went south of the border for my honeymoon. It was a different time then. So
went south of the border in October.
You did, and I kept my fingers crossed and prayed and everything else. Yes, you did. So what do we
not
need
to Cancun either? I went like in for
Tijuana
real territory. Yeah.
I watched a movie over the last week, and I think it's called The Last Laugh, and it was about trying to get this comedian his last laugh, and he was an old guy, and they were trying to get him gigs different places, and one of the places was Tijuana, and I thought, oh my goodness, here you go. So, well, let's talk markets, let's talk about the economy, and let's just talk life. What do you want to kick off with?
Well, I suppose the S&P 500 is just as good as any. Well, yesterday was a really wild day in the stock market. We've had some wild days in the past, and we've been in a downtrend for a long time now. But yesterday was very interesting. And it was kicked off. The selling was kicked off early on by a bank that made an announcement, and the shareholders decided they didn't like that and decided to vote and sell off some shares, and that really bled off into the banking sector, which has great influence on the S&P 500 and everything else.
It does. And I was looking at the S&P. I'd say that you could say we peaked in the S&P, and the end of this is a weekly chart. So we peaked in the last week of 2021, and we've had a couple rallies to this 200-day moving average, and we got above it. We were hopeful that was kind of starting a new uptrend, and we're right at that point of conflict right now is what I'd say. We're down below the 200-day moving average today. That's this right here is today's activity, and you can see we're below that key marker there. We're, as of this moment, 1.3% below the 200-day moving average. So that's not the most optimistic thing we can bring to the table today, but we're not really, we're trying to be realistic and not just paint a rosy picture.
Yeah, and I mean, what I would like to see is I would like to see those prices, those vertical lines get back up to, maybe the 21 day, that 3 week average. If it could get back up there, then that could raise a little optimism for stocks. But right now, it's a good time to be patient, and sometimes it's nice to have a good money market. Not making that recommendation for all y'all, but I'm just saying, when markets get choppy, it's not like you have to go in and buy the dip or sell everything you have. I mean, it's just a time to look and see what the markets are doing and listen to it.
I forget which author said it, but it might have been Jesse Livermore, but I don't remember. But he said basically you don't have to make a decision until you buy. And then once you buy an investment, you're forced to make other decisions. But if you're sitting in the money market, you can just breathe in, relax, and see what's happening. And so
one of our friends said something similar to that yesterday. He said every decision is a trade until that trade proves itself an investment.
Yeah. And so this green line here is the one you mentioned, the 21-day moving average. You can't see it as easily over here to the right. You can see it a little bit here in the left, but that's the line you were talking about. So that's up around the 4,000 on the S&P. I'm going to turn this off.
Did you highlight the volume, Keith? It's fine. Just know the sellers were out yesterday.
Yeah, it's right there. It was higher yesterday. Well, I'll just chase a couple different rabbits here. The reason yesterday, I think, in my opinion, was a big day. You can see it right here. This is investment banks. This is very ugly right here. Like, this is not the bank that dropped 60% in value, but these are the people that generally bring capital to the marketplace for new businesses, and to see the market selling those guys off. And I'm not showing any specific names here. I'm just saying those companies that bring capital and do IPOs, that their stocks are just getting tomahawked right now. And that's a pretty significant drop in a short period of time. I don't know if I can go back in time with this. Let me see if I can change the dates here a little bit, see if it'll let me do it on it. And on an index. Yeah, so I put the date to March the 1st, 2009. That's about when the bear market of 2008 ended. When those things are dropping, when they're dropping in value, it's not a good picture usually. And I'm not being pessimistic. I'm saying it's a good indicator. And then if we were to use, the banks during the same period of time, it's usually symptomatic of recessionary type pressures. When banks start lending money to people who can't pay it back, and the banks start bleeding money, then it says, probably the Federal Reserve has accomplished a lot by raising the interest rates.
I think it'll be really interesting. We've talked about strong hands versus weak hands, and it will be interesting to see who, or if any, steps up to the plate for that bank.
Yeah.
And to see if there are any strong hands who've been a little more conservative. Maybe they didn't leverage themselves as much. Maybe they didn't get as optimistic about one particular sector of our economics, our economic buildup, our economy. But there could be a strong hand out here who says, okay, it's time to move in on this.
So we're not recommending or unrecommending this bank.
No.
We're just talking, this is the bank that was in question, and it dropped 60% yesterday from the 250 level down to the 106.
Is it halted right now?
It must be. That's what I thought. It was down another
Really?
60% when I looked at it after hours. So,
Yeah.
So what that says is, I'll stop the share here for a second, is that when people lose confidence in their bank, they tend to go line up out in front of the bank in the olden days.
Yeah.
And that's what you call a run on the bank. And so then everybody begins to say, what about my bank? I mean, this is the 1920s kind of scenario. And so Warren Buffett said, when the tide goes out, you find out who is swimming naked. And so that's the mindset of what is going on with people that have money at these different banks. You have, most likely, depending on how you have your money, you've got $250,000 federal insurance on your banking money, depending on the titling of the accounts. And so that you don't need to race out to your bank and freak out or anything, because there's no need for that. But these people, when the bank offered that they were going to offer more shares of the stock, you're saying, we're going to bring shares to the marketplace. Who wants some of this? And they're like, why are you bringing this to the market? I think I'm good. I don't want any of those shares. And so the people who already had shares, they're like, I didn't understand this. And then they're hitting the market. And let me share the screen back real quick, because you were talking about the volume on the S&P, but if you see, this stock was trending downwards long before it got in problems over here. But right here in October, something happened when they announced earnings. And if you look at the volume, there's not much activity, but there hadn't been a lot of love since this big drop over here in October. And so there was some warnings that you might look for a safer place for money. So yeah, that's probably the main news. The Federal Reserve came out earlier in the week, and everybody thought that, one of my notes I had, that the probability of a 50.5% rate increase was pretty low earlier in the week, and it went up to about an 80% probability that on March 22nd we'll get a 50 basis point increase in rates. As I was thinking about it this morning, this latest information may cause the Federal Reserve to rethink that. So
Phil
maybe
brought that up yesterday. I mean,
Yeah.
that's a great point. Is this is all dynamic.
Yeah.
And so imagine the Fed. Imagine those guys like Powell just circling around, being like, "What just happened?" And I have an easy solution if he's listening, or if my representatives are listening. Just stop spending money for a while. We stop spending money for a while. This thing will right itself. We'll be all good.
Yeah, be responsible. Is that what you're saying?
Yeah, that sounds good.
Well, along those lines, I think the embracing of socialism or even communism in our country has been pretty interesting the last few years, and I don't think it's healthy for people to embrace that thought process. And I watched a couple of videos this week that capitalism was going head on against socialism in the form of the retail stores, and Walmart's been closing out a lot of stores. I don't know if you've seen that, and they've been closing out stores in communities where their stores are less profitable. And I think those stores tend to be the places where the local socialistic government is not protecting the capital or the property rights of Walmart. They're allowing the theft and things to go on. So they're just saying, we can't do this anymore. We can't make money. And so then the people are coming out and calling Walmart names. But at the end of the day, if a business isn't making money, they have to close their door.
Yeah.
And so some of those battles are going on. And so if you hear the dialogue, don't necessarily believe the certain message you hear. You might think below the water level what's actually going on there.
With all the dialogue going on out there, especially with even the sell-off that happened yesterday, there's investment capital, there's psychological capital, and we're concerned about that for each other, and it is not easy. And so just want to encourage you to take care of yourself out there. I mean, when you're flying in an airplane, they tell you to put the oxygen on first. Take care of yourself, and that's what we're doing here. And in relation to your money, we're looking after your money decisions for you.
I didn't show you my outline of thoughts I had today, Doug, but I said one of the questions I was going to ask you is, what do you think about those two types of capital? Your financial and your mental capital, and those are both real. That individuals have to decide, what am I going to do with my financial capital, and then how am I going to manage my thoughts with that? Because
there are so many temptations out there for your financial capital and for your mental capital. This one probably being the greatest of both. I mean, this tool can have you go down rabbit holes for your finances. It can have you go down rabbit holes for your peace of mind. This is the time of year, we're just coming off year end. And so there's plenty of annual reviews happening by financial advisors. So you might hear about, oh, my neighbor's doing this, or my cousin did this. My cousin's advisor told me to do that. And that may not be right for you. And you may hear something on CNBC that says to do that or this, and it might not be right. And so for me, you ask, yeah, for me, this week, the way it worked on my financial capital is I repaired a van. I was kind of tempted to look at new Suburbans. But instead we repaired the old van. On the mental capital, I went and worked out last night and it was great. And so, those types of things, just dialing things back and saying, you know what, I can be patient. I can afford to be patient right now. It doesn't mean you have to sit on your hands or stick your head in the sand, but just to realize that the luxury of being patient it's a strong hand.
Well, and I think it's where real life is managing probably the mental capital more so than just the financial capital, because most of the challenges that it seems like we have with clients as we're chatting with them, they care about their finances, but what am I going to do? How am I going to incorporate this into life? And I think I've mentioned to you all before, I've had a couple bouts with depression over the years. And so I had to learn to manage the inputs that came into me, and helping other people with their money can create a lot of input and variables, and just learning to be healthy during bear markets took me about 2 or 3 bear markets, how to live healthily through those things. And so
what do you do?
I
know what you do, but what do you do?
Well, I did a newsletter to some of our financial advisor friends to encourage them this week, and I actually summarized for them what I do. As I said, I exercise, I eat well, I encourage others, I meditate regularly, and I move allocations to the sleep level. If that makes sense, like I have to sleep to help you, and you have to sleep through the bear markets. And so learning to not just hold on tight and hope all works out, because the 2008 market was horrible.
Yeah.
But it was a walk in the flowers compared to the 2000 and 2003 market. And most people remember the 2008 market, but it was nothing compared to that.
That 03 market almost took me out of the business.
Yeah, it was harsh.
And if it wasn't for Keith and Gimbal, I would have been taken out. That was very difficult.
Yeah. And so with those sort of things, like we did a trade yesterday where we took a loss on positions for some of you, and we did the trade not because we wanted to lose money. It made itself known to us that this didn't turn out how we expected. And so I can't remember if it was the math, but if we had a 10% position and it was down 5%, that's a 0.5% risk to your portfolio. And so that's the kind of math we're using. We would prefer to get it out at a smaller single digit loss than all of a sudden being that bank that we're showing you that was down 60%. We're not investing in ways in most accounts right now that have that kind of exposure, but you never know what a market can do in a single day.
Yeah. And looking forward, I think, Keith and I are very optimistic on America. This place just offers opportunities like nowhere else to do business. And so, yes, capital might be a little bit hard to raise today, but there will be times where things will look better. Innovation will be rewarded. Service, the way service is done, the way experiences are done, they will be rewarded. The dollars will follow. I've had several people reach out recently about fixed investments.
Yeah.
And fixed investments have risk to them too. I brought back our trusty friend. Do you remember this from last week?
I like it.
And I wanted to bring this out again. U.S. bonds last year down 13.01%. And that's a fixed investment. And it has some variables to it because the bond market is constantly buying and selling. The bond market is very big. It's bigger than the stock market. There's a lot of moving parts to the bond market. And so, asset allocation crowd, what do they do with this information? They say, oh, that was down last year. Let's put some more there. Or if something was up, let's trim that. And so I just want to encourage you guys to just, again, reflect on where we are, knowing that there's a lot of instability on where interest rates will go and where they're heading. But right now, the strong hands are being rewarded by not getting too greedy.
I was looking for a picture to share a picture with y'all. I'm not having success, but it was maybe I'll share this one here. There is an event every August in Port Byron, Illinois. They stretch this big old rope across the Mississippi River.
Cool.
And there's Port Byron, and then there's LeClaire, Iowa, and these two communities tug against each other. You can see like there's a person back there at the end that I think he might have this thing tied around his waist.
That's how we did it at Mitchell Elementary.
Yeah, and so they shut down the river and they're pulling this big stinking rope across the river to show the prowess. And when you're talking about fixed income investments and you're talking about the stock market, we really haven't had that tug of war because interest rates have been so low for so long. And most of the time, the dynamic people talk about is, do you want to be in stocks or bonds? And the dynamic in that picture that came to my mind to show it was you have a river flowing that's dynamic and pulling on that rope at the same time. That can be the economy, it can be interest rates, it can be your own personal mental attitude. And so there's all these variables that just are going against one side from another. But if you can get a 5% CD, which you can today, that causes a lot of,
It's
anxiety. How do you
competition.
pull it? Yeah. And then if you have banks that look to be not doing so well, do I want to buy a bank CD or what do you do? And so those tendencies then go against what people are saying against the Fed. It may, if people are freaking out and pushing money back into the bond market, it'll push those bond
and that
values.
happened in January.
Yeah.
I mean, the bonds really started to rally and look pretty good in January. And then this past month in February wasn't great. I was looking at some data from one of our ETF and mutual fund friends, and they were showing inflows and outflows, how much money is coming into things, how much money is being withdrawn from things. And they had some nice inflows on the equity side last month in February, but the fixed income side, not so good. And so right now it is tug of war. And I guess, if you kept the rope out of the current of the river, that would really help.
Yeah. And so we have what's called inverted yield curve. That's a technical term that basically means short-term interest rates pay a higher interest rate than long-term rates do. Traditionally, that's not how it goes. Usually inverted yield curves are a foreshadowing of a coming recession. And what it simply means is investors think there's more risk in the short term than in the long term. So to give you my money for more risk, you're going to have to pay me a higher interest rate on the short term versus the longer term. And so that's what's going on out there. I'd say if you're looking for CD rates and things, that maybe you instead of going for the short term ones, go out a little bit, maybe 6 or 12 months longer than you were thinking. It'll be, this is not insured guaranteed advice. It's just how I would think about CD investing today, because you can balance some of the short-term ones, but the rate might be lower when you come back for renewal. What else you got banging around up there, Doug?
Not much else. I think I was doing some reflecting on just our brand alone. And in 2005, we had several different ideas for what we might call this operation. I think we had words like strategic in there. I think we had words like bearing. We had Gimbal. And shout out to our good friend. We ran these past him, and he said, Gimbal, you need to go with Gimbal. And a gimbal is a device. It's just a device that holds a compass in place. And so when it's looking rather wavy out on the sea, the gimbal is the device that holds the compass in place. And I think during times like this, it's super important to have a gimbal. And the gimbal is the device that will breathe in and breathe out. it's taking care of ourselves. It's giving an opinion, and then it's making decisions. And we are honored to be your gimbal. And so that's what I was reflecting on earlier today, as I was thinking about what yesterday looked like in the stock market.
Yeah, I had dinner with somebody that said, "Oh, it was a bad day in the market," and I was like, it looked worse to me. This is my opinion. I'm not pessimistic. I'm just saying it looked worse because of what went down yesterday than an ordinary down day. But we'll see.
It was just easy.
Time will tell. But the same kind of idea as the gimbal, as I had a doctor's appointment yesterday, and my healthcare provider has an app or a link you can go to, and they just put all this data in there. And I just was when I was sitting with my physician yesterday, I said, I see all that stuff in there, but the fact of the matter is I come to you because I want you to tell me what it means, because I don't want to go research all the junk they put in there, because I don't even know what it means. And then I'd start going down this little rabbit trail and get all emotional about things that I probably would never understand. And so I would encourage you that, as well as what we desire to bring to you is wisdom. And if you've got questions, concerns, or thoughts, call us. We'd love to chat with you, what we're thinking, what we're seeing out there, and help you think through decisions that might be more important than just what did the market do today.
Hey, Keith, click on there and show me who's on today.
We have a variety of people.
I just want to say thanks for joining. And I'm looking at, and the folks who are on today are from all over the country.
Yes.
And so wherever you find yourself today, it's all about relationships. I know some of you are in warmer places, but it is all about relationships. Maybe you're stuck here in Indiana with me, or maybe you're up north. But it's all about relationships. And one of the key ingredients, Keith mentioned it, about protecting your mental space, is just enjoying other people. It takes the emphasis off self. And so hope you all have just a really great day.
Enjoy your weekend, and we'll look forward to talking with you again next week. Take care.